Welcome to another podcast in our series, Creating a Caregiver Toolbox. I am Paula Pagan, a licensed clinical social worker and owner of Long Island Elder Care. I have worked in the field of social work for 30 years, and my mission has always been to service my clients and their families. We provide in-person and telehealth mental health counseling to seniors in our office in Smithtown. We also provide mental health counseling to seniors in assisted living programs. In addition to mental health counseling, I am a CEU provider for social workers and case managers. I take a very proactive approach to treatment, and I want my clients to educate themselves about the services that are available to them. We always want to prevent emergency-driven planning. We need support and coping tools to move forward in our lives. We are here to help you. Today we welcome a special guest and the reason this podcast exists, Frank Melia. Frank was extremely instrumental in helping us create the series and allowing a space to interview a wide range of important individuals who play many crucial roles within the elder care community. Frank Melia is a division manager at Contour Mortgage, and the Melia and Pacelli team specializes in assisting our aging population with mortgage financing options to older homeowners. Hi, Frank. So nice to be with you today.
Nice to be with you, Paul.
So, how did you first get started helping senior communities with mortgage financing?
It goes back many, many years ago. It was about 2001 or 2002. And I was in my office, and a family friend called. And, you know, if your listeners and your viewers remember, back then there wasn't much on social media. You know, it was Ask Jeeves, it was actually called. It wasn't Google, it wasn't anything. I was in the mortgage business, and I was helping families, purchase homes and refinance homes. But this particular friend, they needed help keeping their parent in their home. I think the father passed away, and they wanted to just keep the mother in their home. So I did a bunch of research. Even the banking industry back in the early 2000s wasn't aware of the reverse mortgage program, wasn't aware of a lot of the programs that are available for our older aging population. And that's when I really first learned about the different programs that are available for our senior homeowners. And ever since then, I've had a passion on just helping the aging population get educated, like you've always said on your podcasts, because education is key. There's so many different moving parts with our aging population. Some of them want to stay in their home. Some of them want to just have, easier access to their home, whether they're handicapped or if they have a wheelchair. So I started really looking at all the different programs that are available. And, with working with a lot of professionals like yourself and all the elder care individuals in the country, we've been able to help a lot of people stay in their homes, and age safely.
Which is so important, and education is power, I feel. So,
Yes.
what options do our aging homeowners have to pay for short and long-term care expenses?
That's a really good question. I'm in my 50s, and I say that because a lot of people sometimes don't address things with their parents, or they try to have those conversations regarding, if we need short-term or long-term care, how do we pay for it? Obviously, some families were insurable, and they took out long-term care policies, which is a good way to protect against all the health concerns that we can face as we age. But I find a lot of families, some of them are uninsurable, and some of them don't have those policies. So they have to be educated, and that's our goal at our division at Contour Mortgage, working with other professionals like yourself, working with professionals in the elder care communities, as well as the communities that they serve and we serve, just to let them know what options are available. Now, when a family comes to us, we do what's called a financial assessment. What I mean by that is we just gather a lot of information. A lot of them have maybe they've done a Medicaid application, or they've started a Medicaid application, or they spoke to a social worker, or they've sat down with an elder care attorney, so they understand what they have to start to look for. So we gather all the information, and then based on all the financial information that we gather from them, we can really make recommendations. It could be as easy as an unsecured loan. Our Contour Mortgage doesn't offer these programs, but I always look for the best interests of our aging population. What I mean by that is, if sometimes, not to say it this way, but a credit card can help a very short-term need. I'm not promoting credit card use and people should use their credit cards, but it depends on how much people need. For the short term, there's a lot of different avenues. People can take out home equity loans on their home, like a HELOC. People can look at mortgage financing that we specialize in. But there's a lot of unsecured loan programs through local banks and credit unions, or even a credit card or a family member. So the short term, I always like to just give them every option that there is, obviously. I also like to obviously give them the options on the long-term care, but obviously you know from being in the profession for so long, when someone looks at long-term care planning, a woman said this to me last week. She's like, Frank, if I know my expiration date, we can plan this perfectly. And we all joke and laugh about that, but it's the truth, because the variables when we all sit down with families is how long are our loved ones going to be with us, or how long is my spouse or my mom or my dad going to be with us. So we all plan, for the longest term possible. And the reverse mortgage is one program that a lot of professionals ask us about, as well as homeowners. They're not dirty words anymore, as I put it. Reverse mortgages used to be, two dirty words, as I used to call them, and people would always freeze up about a reverse mortgage. It's become a much more financial planning tool, and it's a much safer program, which we'll get into. But it's really just giving everyone their options, like you've always said. You want to educate the communities that we serve.
And you want to do it before it's an emergency type of planning. So it's good to know. Even, I just want to let our viewers know that they don't have to be in the middle of a crisis. They might want to know what their options when they have an aging person in their life, to know what's available to them.
Absolutely.
Yeah.
But we both know, as well as some of your listeners, that a lot of it is the crisis planning. Because, even being in my 50s, and me and my sister speak to our parents about their aging, what's going on with them aging and what we're going to need in the future. But I've had these conversations, I even had this conversation with you, that, it's a hard conversation sometimes between child and parent, or child and aunt and uncle. When it's your immediate family, we can bring attention to what is needed, but sometimes our family just, it's not a conversation some people want to have.
Right.
These types of podcasts, doing seminars in the communities that we all serve, doing events with social workers and elder law attorneys and people in the home healthcare industry, will spread the word, and we'll be able to educate people so they don't worry about or wait until it's crisis planning time, as we all call it. But I've always said we're up for the challenge. And if someone does come in, I was called in once. I got a call at 4 o'clock from an attorney. He said, I have a family that's in desperate need of sitting down, going over mortgage financing to keep their mother with Alzheimer's in their home. And I'm like, when do they want to see me? He was like, now. Make a long story short, I went to Brooklyn at 8 o'clock that night, sat down with the family, and we worked out a game plan. So working with the right professionals helps. But, giving our aging population and their children, or trustees, or whoever their advisors are, all of the programs that are available helps, helps that family make that decision for either what their short and long-term, needs might be.
Right. That's excellent advice. So can you tell us that what is a reverse mortgage, and what are the benefits of getting a reverse mortgage?
These are the questions I get the most. I find people don't want to openly speak about reverse mortgages sometimes, because another client said this to me once. She's like, Frank, I'm 85. I never thought at 85 I'd be taking out a new mortgage. No one plans to take out a reverse mortgage. And the goal is not to need a reverse mortgage, in my opinion, but the reverse mortgage program has changed drastically. To give your listeners a little bit of a background, the first reverse mortgage was done in the 60s. It was actually done in the Northeast. A gentleman, his football coach lost his wife. No, the football coach passed away, I'm sorry. So the widow went to her banker. Now, this was the 60s. She was a homemaker. She was raising the children. And she needed money to survive, because with her husband passing, she lost his income. So the banker just came up with a simple concept. We're going to give you money now. You're not going to have to make a payment, and you'll pay it back when you pass away or when you sell your home. So that's how the whole reverse mortgage concept came around in the 60s. Mm-hmm. It was implemented here through the FHA and HUD in the Reagan administration in the 80s. Okay, I started doing reverse mortgages in the early 2000s, and I'll be honest, it wasn't the best program when it first came out. There was no income check. There was no credit check. Everyone got it like 80% of the market value, and not every situation worked out the best, because you have to make sure people are financially secure, and credit, and they have good credit, because that just tells people that they're going to maintain their home and they're going to make their insurance and tax payments. So fast forward till today, between 2010 and 2015, the entire program changed.
Wow.
They did what's called financial assessment, which now an applicant or someone applying for a reverse mortgage actually has to qualify for that loan. Okay, there's no required monthly payment with a reverse mortgage. That's the main difference. You're going to borrow money. You're going to get a line of credit. You can take some at the closing. You can take some monthly. You could take some when you need it, which is great flexibility, but you don't have to make a required monthly payment. Interest is going to accrue on the loan balance, but that's the flexibility that it gives our aging population. So when financial assessment came into play in 2014, the guidelines now that the lenders, the bankers and the credit unions that offer these have to just make sure that the borrowers, let's say it's a widow or a widower or a husband and wife, have enough income. It's usually Social Security or pension, and also some work, that the income covers the real estate taxes, the homeowner's insurance, the HOA fees, and the utilities. So you don't have to cover a mortgage payment. So like if you or I or some of you listeners would go to purchase a home and they were qualifying for a traditional mortgage, not a reverse mortgage, we have to make sure that they can afford to make the payment. So that's the main difference with a reverse mortgage. There's no payment, and it's used today so many different ways as a financial planning tool, especially for home health care, paying for our home health care costs, home improvements when our parents come out of rehab, or if we have to adjust certain things in the home. We had a family once where the mom came home from rehab and she was in a wheelchair, and she loved to cook. She was the matriarch of the family, so the family needed like $40,000 to lower the cabinets, lower everything in the kitchen, make the kitchen more accessible. Create a walk-in shower rather than a tub where most people fall in their bathroom. So the reverse mortgage program has come a long way, in my opinion, in the last 25 years. And the reverse mortgage is for people that are age 62 and over in New York State. It could be on a 1 to 4 family home, as well as a condominium if they're FHA approved. And recently, in the last 12 months, co-op reverse mortgages have become available in New York State.
Good to know that.
Yes, which was a battle. The industry was trying to get co-ops approved for many years. The state finally approved the co-op program. So now these people, it's predominantly in New York City or the boroughs that need reverse mortgages for co-ops, have access to it as well.
Oh, that's very, very important information.
Yes.
So what is the process of applying, Frank, for a reverse mortgage?
That's part of the whole reverse mortgage world, as I put it, that I find is the best. It's regulated, and it's to protect our aging population. Before anybody can even apply for a reverse mortgage, they have to go through HUD counseling. Okay? They started this in the mid-2000s. And why it's a great feature, in my opinion, is because, a homeowner can speak to a banker, can speak to a credit union representative, but, we all work for the bank and we work for the credit union. So this was the government's regulation and guideline to say, okay, you could speak to an independent third party. Okay? Do these counselors know everything about the program? No. But they know enough that they can just interview the person. So it's a phone interview. There also are some agencies that'll go to the home. We have a family right now where the woman's very hard of hearing. So she wouldn't be able to really understand much over the phone. So we found an agency that would go to her home. So they have to do this phone call, and the purpose of the phone call is to make sure that they're not under duress. We all hear about elder abuse. We all hear about financial crimes. And being in this business for half my life, I understand now that a lot of the fraud is geared towards our aging population. Of course, they're older, maybe their memory's not the best. So that phone call is basically the way that the counselor can determine that they're not under duress, they're not being forced to do this. Plus also it gives them and the family members to ask any questions that they have. So that's the first regulation. After that, they can sign an application with a licensed mortgage banker or a credit union or anyone that offers the program. Now, even when they sign the application, they don't have to close. Meaning, the institution, if they decide they don't want to do the loan, the bank just has to stop the file and, rip up the paperwork, more or less. So we have the regulation with the phone call, with the counseling, then they do the application. Then an appraisal is done to make sure that the house doesn't have any health or safety issues. Remember, this is for our aging population, so they're 62 and over. And our average client is in their 80s. So when the appraisal's done, it's a typical appraisal, just like an FHA appraisal would be to set the value. But the appraisal's going to look and make sure there's no safety or health issues that'll affect them or anyone that comes and visits their home. So there's also, besides financial assessment, which I said, you have to qualify financially, there's also some features that protect spouses. Early on in the early 2000s, when I used to sit down with a family, sometimes we would have a family where the husband was 62 and the wife was 60. It's typical. But the guideline says you have to be 62.
Right.
So what was going on before this guideline change is people were actually removing their parent from their title. Or the spouse would say, Mom, remove yourself from the deed so we can get the reverse for Dad. Because they needed the money to pay for the home health care aid. But just by stating that, I'm sure you and your listeners know that what could happen is, and we were seeing that sometimes the borrower would pass away. So now the other spouse was displaced. So if you have only one spouse on title and they pass away, the loan becomes due. So that was a major issue. The guidelines changed about 10 years ago, so now we can protect non-borrowing spouses. And we get a lot of situations where, maybe someone inherited their house from their family. And so if I had a case recently where a woman inherited it's a third generation, 3 generations have lived in the home, so it's her family. So she never put her husband on the title. It's typical. But now if she needs to do financing, we don't have to add him to title, but he can be protected. So there's much more protections today than there's ever been for this program. And the process takes around 4 to 5 weeks with our bank. But I would tell your listeners to anticipate it to take anywhere from 6 to 8 weeks for the process. And I want all your listeners to know that if they start an application for a reverse mortgage and they decide that they change their mind, just tell the bank you're working with that they don't want to go through with the application. They can stop the application process at that. Let the family, regroup, and maybe they'll revisit it in the future.
That's very, very good advice. So what challenges do older homeowners face when they need money to pay for care or home improvement? I think you answered that a little bit before.
But it's a good question because the challenge that I face is, we talked about this earlier, it's human nature to procrastinate. A lot of people wait until they need services to start educating themselves about it. So I really think podcasts like this, community events that the elder care attorneys provide, that you provide to social workers, educates not only the professionals, but also the children, I find. Like, I'm in my 50s, so I know that in your 30s and your 40s, you might not think about this. But once you get into your 50s, your parents are usually in their 70s and 80s, and that's when children should start to educate themselves. So, but some of the obstacles I find, besides procrastination, is people don't address certain things. I've been to people's homes where they've been in disrepair. Now, don't get me wrong, some people can't sometimes afford to fix their home, but sometimes their homes are in disrepair and they can't get a reverse mortgage or they can't get financing because they've just let their home deteriorate over the years. So if people just kept their home in okay shape and livable, habitable, as I call it, meaning no health or safety issues, and speak to your advisors, speak to the social workers. I learned a lot. I've been in this business for 25 years. I've educated hundreds of professionals over the years, as well as homeowners. And yet when my own mother-in-law was diagnosed with dementia, and she was faced going into a facility, I saw firsthand how her children, which is my wife and my brother-in-law's, it becomes a very emotional event. So sometimes as children, we're not looking at, or we know what's best to protect our parent or a loved one. We're making emotional decisions. Mm-hmm. So, educate everybody in the community, which we all do, and people should start looking at this. I think when they get in their 50s, for their parents, even themselves, aunts, uncles, cousins, because the more education that the public have, and as well as the professional communities, we all can address these things before they become a crisis.
I think that's an important point because I think maybe the children of the parents need to maybe talk to someone like you just to see it as another option. So again, they'll have that in their toolbox when they need it, when the need arises.
I agree 100%.
So is there anything else that you feel is important to mention that we haven't covered today?
Education is key. Early in my career, I had the opportunity to work very closely with a certified financial planner. I was actually a financial advisor for 10 years before I got into retail mortgage banking. And he always instilled in me as a young man, starting my career, to educate everyone you can. So, the last thing I want all your listeners to know is that, education is very important. I know you're a huge educator and you're an advocate for education, but the more we know and the more the children know and the parents know about what options they have, they'll have that education. So when it becomes an emotional discussion, as I put it, or they're in crisis planning, or the parent now has memory issues, or fell and broke their hip and they're in rehab, they'll be able to go back to those notes, as I put it, or go back to the social worker, or go back to the mortgage banker, or their advisor, and they'll have all that information handy. So education is key.
I agree with you. And lastly, how can our listeners get in touch with you?
The best way to get in touch with us is obviously anyone can visit contourmortgage.com, but I can be reached directly at 516-729-3438. Once again, that's 516-729-3438.
So once again, I want to thank Frank and all of you listeners for tuning into our podcast today. Please send us comments about any other programs or services you would like to know about. And please email us at longislandeldercare@yahoo.com if you would like to be part of our email list for any future events. Until we meet again.